Apple delivers a blowout quarter. The stock is up more than 7% in pre-market trading. Markets await the Fed's FOMC rate decision and press conference while they digest President Obama's State of the Union. I'm Alix Steel, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix Steel with The Street, and together we bring you the morning call. Scott, we have sentiment pretty mixed today, right? The NASDAQ is higher, Apple pulling it higher, but then the Dow and the S&P are relatively flat. Are we still in the consolidation mode?
I still think we're in consolidation mode. A lot of people are waiting for a pullback. We're trying to work off some of those overbought conditions. The market had a big move over the course of the last month. So sometimes sideways action is good because within sideways action, you can see relative strength, you can see relative weakness. There's still things to do, ways to accumulate, ways for stock to then rebuild bases to give traders more confidence in setup. So I think we are in consolidation mode, but that could change as we go into the Fed, I think, later this afternoon.
And you said things to do before we get to the Fed. Are you noticing rotation into sectors, or is this still a stock picker market?
There's been a lot of rotation between sectors, and then you have to pick the stocks within the sectors. And every so often the stocks rest, and then they continue. Then perhaps they trade down. So it's been a very methodical move, and traders are getting rewarded by going 1 to 3 day strategies, or even trying to hold a little bit longer. But as far as the market's concerned,
right.
We're right now still in this accelerated uptrend. Yesterday the dip was bought; it was shallow. So let's see if that can continue. Go right now to the S&P. I'll show you actually the spiders. All right, just to give you an overall picture like I always do each morning, here was that October low, then we had the November low, the December low, so a series of higher lows, which is bullish. Then it started to accelerate. Okay, remember we broke this descending channel here, December 20th gap and go, broke above this downtrend, and then here is that accelerated uptrend. This is an ascending channel. Unfortunately, ascending channels are great when you ride them, but they typically break to the downside. So that's what I'm watching. And as of now, yesterday they came in and saved it. 130.60 is that line in the sand. That is yesterday's low. So if we could stay above that area today, I think the bulls remain in full control. I'll give you a closer look. It's right there. But if we were to close below this uptrend that's been intact since this area might be breached a little bit, and then you could see a corrective type move to maybe 128.91, and then perhaps even to test this gradual uptrend at some point later this month.
And what are you paying attention to? We have still a stronger dollar here. We also have the Fed later on today, the fourth quarter first estimate GDP on Friday. What are traders really looking at to trade off of?
I think every day it's different. We were just obsessing about whether the Greece deal will be done. Today it'll be the Fed. What are they going to say? I think that they're going to keep everything status quo. Rates going to be lower probably till 2013. They already started QE3. Remember in December everyone was on vacation. They did that 3-year loan. People aren't really talking about that, but that was their version of QE3. That's when the market started to act better. And then once we get through the Fed, then everyone will start talking and obsessing about GDP. So each day you monitor the action, you figure out the composure, and then you figure out your risk. You don't always be all in directional. Some days you're holding more positions, and some days you have a bigger hedge depending on what's going on. And right now I'm holding like 4 to 6 positions, but I'm also hedged, and I'm being a little bit more careful.
It was like QE3 for Europe. I think that's more what it was. But all right, let me get to some really cool stats before we move on to sectors here. Bespoke had a note that said that since 1945, this is the 8th best start to January for the S&P, and when the index has rallied more than 4% to start the year, the S&P has averaged a gain of over 1% for January. And when the S&P is up for January, the S&P has historically gone on to average double-digit returns for the entire year. I know this is like, you can't go with history here, but do you think traders kind of know that and sort of want to see a higher market into the end of the month?
Sometimes history does repeat themselves, and historical data in January you get inflows. So if inflows takes the market higher, that means the composure is good. My target is about 1410 to 1440 this year. We're already about 1310, which was the first quarter target. So if that's the case, if history repeats itself, their double-digit gain will take you right into the 1400s.
Right.
And as long as we muddle through Europe and we don't get any kind of phenomenal or crazy crisis, I do think that this methodical move will continue with some corrections along the way.
And then in the meantime, we really wanted to get into companies that have reported earnings that Scott's been trading to see after the dust has settled, what do you do? So I want to start with Apple. I don't think the dust has settled, but obviously they had that blowout quarter. You were taking options into the quarter. What are you doing today? How are traders looking at it?
Well, there are a few different ways to look at it. For me, I'm along the options guys on my radio. Some of them rode with me. I'll tell you how I'll deal with it. I'm going to sell half in the first 15 minutes, and then I'm going to hold half to see if we could hold this up move. Usually they try and sell down Apple. You saw that a little bit last night. The stock was halted. It opened up around 460. They traded it down to almost 447. So you made actually more money shorting the open on this phenomenal report than buying it. But maybe that changes now because we've pulled into about 452, 453. I think if they can't pull Apple in the first half an hour below that area, it's going to drift higher, and then you could get an entry. And then at that particular point, a day or so down the road, maybe I'll try and sell these options, and hopefully the stock will be north of 460.
So trade versus 447?
447 was the overnight pivot. That's one thing to watch. If we break that, then you have to put in a new pivot low to trade against. Just don't just buy, saying, okay, Apple's report was great, which it was. It was unbelievable, and I think it goes a lot higher, over 500 this year. But short term, there's a trick to trading these stocks after earnings because it's a crowded trade, and the pros don't want you to win.
Are you looking at the derivatives like a Qualcomm, TriQuint, Broadcom, perhaps Skyworks?
A lot of those look good, okay, and SanDisk also, and they're going to report we'll get more out of them. Qualcomm I was long for a while. I got rid of it just because it was extended.
They've all had good runs, too, so it's kind of hard, right? Even Broadcom has had a good run.
Yeah, and Broadcom, if you look at the chart, it looks good. It had a nice run, but it's consolidated, and this is what you get in this type of market. Yes, was your perfect play in Broadcom once it broke this downtrend and gapped up, and you could have added right there? Yes, but at this point, traders look for momentum, and you have a 4-day consolidation. That means some people sold, some people bought, and I think Broadcom above about 35.50, it can continue to the 35 to 38 area, considering that the semis are really strong as well.
Right. All right, let's go to the banks. I want to go to Goldman because they reported a couple of weeks ago, right? So beat on earnings, revenue was light, got a downgrade today, but it seemed like Wall Street gave banks a pass because expectations were so terrible. If you didn't meet those terrible expectations, that it got a nice pop. Now the dust is starting to settle. Now we're getting the downgrades filtering in. How do you process that? How do you trade that?
Well, at this point, I think most people took off like a tier 2 or tier 3 in the banks, considering we just had a big move. I came in today thinking that I might be able to buy Goldman because it was setting up a nice pivot until I saw the downgrade. So now I have to switch gears and figure out will higher support hold. So if you look here at Goldman Sachs, what was developing here was a nice flag type pattern. Okay, here was when it broke the downtrend. It had a nice continuation move from 101 to almost 110, going sideways. So now it's opening down with the downgrade. I would say if it could hold above this 106 and go sideways, I would call that very constructive. And then at some particular point, if it gives it enough time and builds a nice flag here above this 110, 111, you could see the next resistance come into play around 117 on Goldman.
So maybe those not so terrible earnings give a floor.
Yes.
For something now. Okay, but let's go to Intel here. Had a big climb after earnings. Can it go higher from here? I mean, the company had great margins, guided revenue higher for 2012, good signals, but it has had a big extension.
Yeah, and this stock started to gain respect last year. We've talked about it so many times in the morning call. It could be one of your core mega caps. It got treated well on earnings. They used to sell it off every time on earnings. Now it's actually being treated favorably. But if you look at the chart here, it's just a little too extended. You had one more chance to buy it above 26, and now it's coming on 27. I do think it could hit over 30 this year, but I'd rather see you try and buy a dip back to retest this 26. It's had a big move from 23 up 3 days in a row. Just don't initiate it here, but if you're long with the macro approach, stay the course with Intel.
And then let's go to F5. It had solid results, good guidance, but that was in stark contrast to, say, a Juniper that cut its fourth quarter earnings estimates earlier this month. And we have Cisco coming out February 8th, which should provide some insight into the sector also. So it looks like perhaps this was a company-specific story. What does the stock reflect, and how would you be trading it into, say, a Cisco?
I think F5 was somewhat surprising. That's why it had such a big gap up. Exactly. So the short interest got squeezed. What I like to do is I like to see a stock open up, big on earnings, and then hold that earnings gap for a few days, and then get continuation. And that's what we started to see yesterday. So if you look here at the chart of F5, I like it. I still think it's in the game. You had a nice consolidation here, right? Since October, going sideways. This is your gap up into earnings. I'm long F5, and I just started to buy it above this previous high here of around 122. I think it can continue, and I think it gets a lot higher this year. It's down on the open maybe with the futures. If it gets above yesterday's high of 124.29, I do think it can continue. It was actually helped a lot by VMW yesterday as well.
I see, okay. And then last up in this group, want to hit on Lululemon. They haven't actually reported earnings because the fiscal fourth quarter ends January 29th, but it did guide higher, raised earning estimates by 16%, revenue by almost 10%, near 52-week highs. Now what?
Looks good for continuation also. On that day, it gapped up. It was hard to trade, but now it's been consolidating. If you look here at the chart of Lulu, very nice here. Gap up. Couldn't fill the gap. That means buying pressure stayed here. That means shorts remain trapped. I did get long on this day. Nice wide range bar. And now if you look a little bit closer here, it's building a nice level flag. So if this starts to get above this 62.50, you could see a move to new highs. Might take the actual earnings, but or they might try and do it before. It's on my radar. I'm long. I will add above 62.40 with the right setup.
All right, and we are going to be right back with some laggards you might want to be paying attention to right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Here we go. Let's get to some laggards that might be able to make you some money. Want to hit on U.S. Steel reports on Tuesday, but AK Steel reported the other day, reported a loss of 26 cents a share. Now, the loss was better than expected, but he had operating margins were a negative 20%. And I bring that up because it could be that we'll see higher steel prices, more demand for steel, but it might not make that much of a difference for the actual companies producing the steel. So I wanted to see how you were trading X.
Well, at this point with the report yesterday, it went from negative to positive, so that shows me that it could be washed out and priced in. Because these steel companies, they've had a horrendous run, or not of a run, over the past 2 years. And now you see a nice lower level base, big time accumulation consolidation. You look at X US Steel, you will see this is the pattern I'm watching. I talked about this as a January effect play, and it's nudging against big time resistance. I'm long this. I added yesterday. I think if this can get above 29.12, it could see a lot higher prices, maybe even up to this moving average of 33. You might see a little hesitation in front of Tuesday's number, but if on a bad number like yesterday you saw with AKS and it blew it off, I think the shorts might get scared going into that number.
And I guess it's the same thing. If it's not as terrible as people were expecting, that means it's good.
Yeah, because we're at the lower end of the range and the market's looking for things to latch on to, and this is a name and they're not expecting much out of it. So from here, for a bottom feeder trade, it looks okay.
And I wonder if the same could be said for Crocs, reporting at the end of February. But here's the deal. It guided Q4 revenue at the high end of its prior range. The company expects full-year revenue to come in at about $1 billion. The stock got a little pop after that, but it can't seem to make up the gap from that steep sell-off it had in October when it negatively pre-announced third quarter earnings. So I wonder if it's a trust issue here, if traders are a little scared to actually trust the numbers will be good.
At this point, I think we're building trust, and if you didn't get caught in that big down move, there's a nice consolidation here, and the pattern to me looks really good. If you look here at the chart, I am long some Crocs. I don't think it's only going up for a takeover move, so look here at the chart. You will see this huge gap that you were talking about, Alex, was right here. Pow! Definitely hurt if you were involved. But then, after 4 months or so, people do forget. Then it came out with some good news, and now it's been going sideways right in front of that gap. So I would say if this thing can get above 1935, you're going to see at least a partial gap fill to the 20s, maybe even to this moving average around 2187. Not saying a huge gap fill, but a nice trade if you're just looking for the active movement.
And Dendron's kind of the same story. I mean, the stock plummeted about 66% in August after it abandoned its forecast for its debut drug for Preventage. Reports in February, at the end of February here, we're still in that consolidation mode.
This looks very interesting too, and I went long yesterday. I went long some options. There was some news that Amgen might take them over. I don't think it's just playing off of that. I do think it's a bit of a comeback story. This company does cure cancer. They might not have the best stats or whatever. I can't get into that. I'm not a doctor or scientist. But
Adam Feuerstein on the street will tell you all those stats.
Yes, go tune into the street for him. But if you look here at the chart, it looks very interesting to me. This stock has been very shorted. Obviously had this huge gap down. Shorts are still in there. Got very excited. Coming into the beginning of the year, big pop up. Hasn't been able to pull in. Has gone sideways. So I went long yesterday. On that little pop, and I think if it starts getting above 1470, you have a huge gap all the way up to about 30. I don't think you get that, but no reason why this thing can't be $17, $18, and you can make some money if you don't want the overnight risk. I think you buy like February and March $15 calls, and if they do get taken over, congratulations, and if it fills the gap, you'll make some money with at least the risk as your premium paid there.
And Molycorp, we highlighted the stock about a week ago, I think, about short covering rally here. Are we still seeing more of it?
This one hasn't been as impressive as some of the other ones like we had with GMCR, First Solar, even in Netflix. We've looked at this. The rare earths were like the darlings, what was it, 2 years ago?
Yeah.
So last year they got abolished or abused, a few of those bad words. But anyway, it's coming up a little bit. It's a little lethargic, I guess is a word I could say. But if you take a look at the chart here, it's got a decent flag. It's going sideways. It's trying to break what could be deemed as a big downtrend. So if you were short MCP and it started getting above this 30, I'd be scared if I was short. So, holding sideways, as long as it stays above, just say the low here of 27.66, above 30, you could see a squeeze to 35 or perhaps even 40 on MCP.
All right, let's go. Some quick ways to make some cash. Want to hit on Las Vegas Sands and win very quickly. We talked about them yesterday in depth. How are they looking?
They look good. LVS was a great negative to positive trade. I'm long. I'm going to stay with it. It's got to break above 48 to 50 with huge volume. It might wait till earnings for that. Win, a little different story. Coming off the lows, I see a nice tight setup. Above 120, you could see a nice pop for cash flow.
And Occidental reported earnings this morning. They made $2.02 a share on revenue of over $6 billion. They beat estimates here. Is this stock looking good?
I need to see what their guidance is, and I'll check that out. But
it wasn't out yet. Mm-hmm.
Schlumberger, if it is good, I like that setup because earnings are out. You could play it a little bit different. It's already had some time underneath its belt. Look at SLB right here. Nice tight pattern. Came off those lows, going sideways above 75 to 77, and you could see a nice move well above 80. So we'll see what Oxy does, but I think SLB is good for an investment and a trade.
Schlumberger over OIH?
Or both. I'm holding the OAHs, and I'm going to use that as an investment vehicle, acting very well, but I might use SLB as an add-on cash flow trade if it can get above that level.
And Sears, you had covered your shorts. How are you trading now? Or do you still have some more shorts on?
I've covered 3/4 of my shorts, maybe even a little bit more than that. I do still think it could work its way lower to the 43 to 45 area, but we just had a 5-6 point move. Hold it if you want to trail it, but it is what it is.
And Netflix earnings after the close.
You know what, since I have a lot of room after today's Apple move, I might take some long, small, just premium paid. There's a huge short interest. People aren't expecting that much. I like to pull down from 103 to 93, so I might just do a small option play, but as soon as I buy those options, I'm going to throw the money out the window.
And Broadvision making new 52-week highs right now.
Oh, B-Vision. I think that's a short. I think it's an air stock. Yesterday was nutty. We tried to short it with the same strategy as Shield, and we got squeezed until late in the day, around 3 o'clock. The reports were coming out about the stock promoter, about some of the headlines being faulty. If you take a look at B-Vision here, I am short some, and huge topping tail after a big run. I think, below 32, and you'll be seeing about, 27 to 25-ish on this one.
All right, wrapping it up here, is there anything that Ben Bernanke and the Fed can do today to promote some kind of rally in stocks other than announcing a big bond buying program? That you'd be watching for?
I don't think that the street's really expecting that much. I think they want to see status quo. They want to know that rates can be low for an extended period of time, that they're going to be accommodative, that they're behind us and they're not looking to pull back yet, because the last thing we want is any kind of pullback.
Well, as I was going to say, if we see any indication that perhaps they might raise rates earlier than mid-2013 or just keep it at mid-2013, would that be a negative, you think, right now for traders?
I would say earlier.
Earlier would be bad. Okay.
I would think so, but then we might sell off and then say, oh, what does the Fed see? They see us getting better, the economy improving, so it might be a knee-jerk sell-off and then a rally saying, okay, they're believing in the economy, we should believe in it. So at this point, Fed days are tricky. So let's just watch the next few days, not just today, to see what the real composure is. And we've had a big run, so you have to be a little prudent with some hedges on. Scale back some of your excessive tiers if you have them, and then we'll get more clarity as the week progresses.
All right. Good stuff. This is Wednesday. Happy Wednesday, everybody. I'm Alix Steel from The Street. Good luck trading.